Well, we were trying to cut away the background noise of short-term trading, short covering, retail investors buying bankrupt companies, that sort of thing. It comes back to quality and balance sheet strength and survivability. But the sectors are there for all of us to see. There's nothing revolutionary in saying online, retail, definitely on that side. It's very clear. Healthcare services, consumer staples, utilities, the components of technology, all of these things are required in this new world that we're operating within. And we don't need to, I suppose, chance our arm buying financially engineered, over-indebted companies, providing services and products that we no longer think we want. So it's a matter of stock selection, and it's also a matter of actually focusing on what these businesses actually do.
Do you prefer to play the recovery via the US markets instead of Europe? And I was looking at some forecasts from Berenberg where they upgraded their GDP numbers last week across the board, but it was the US that saw a better improvement after we saw those retail sales numbers cross. Do you think the US is going to outpace, and do you think that US market would be a better place for investors at this point as a result?
Well, it's a good question and a tough one to answer. I think that I've always thought that stock picking is better than picking countries. So geography matters less than sector and company. What we're seeing this time with this crisis is that some countries are coming out of the lockdown better and healthier, whilst others are still not anywhere near the end. And the other thing is that supply chains are going to be shortened by this interruption. So I think geography will matter more than in the past. Having said that, to judge that one area like the US is better than the rest, I think is probably a misunderstanding of what's going on. The US has got its strengths, it's got some fantastic companies, but if you X out the technology leaders, I think the challenges are very much there in the US. So let's focus on them, certainly. But elsewhere, you've got good companies in more stable countries that are well placed to benefit as recovery picks up. And Europe, for all its faults, is having a relatively good war in terms of coherent action.
David, it felt for the last couple of weeks investors could see their way through of all the clusters on coronavirus, but now a second wave of infection fear sweeping across the investor community. What do they do with this? Because it feels as though companies have planned for closure again at some point, or closure per certain jurisdiction. A lot of activities are online. So what do you do with the reopening theme? Will it be as bad this time around, or closing theme?
Well, I think the lockdown on the first wave was entirely understandable, and as we've come out of that, some countries have found ways of going back to work, back into business. But it's by no means clear that Germany, for example, or Denmark are out of the troubles that they had. It's simply that they are more aware of where the infections are. So I think that the chances of a complete lockdown, second wave lockdown, I think are low, given that the damage done by the initial lockdown and the amount of money spent on papering over the chasm is something that's going to be difficult for governments and central banks to repeat. So I suspect we will have to try and find a way to cope with second waves. Let's hope it's controllable, and let's hope that business can continue to operate and that people will be prepared to go out and work and consume.